Have you invested in Global Innovation Fund launched by Axis or Kotak in the last couple of years? Maybe you are sitting in a huge negative returns and you're thinking, have I done a right decision by investing in this fund? Should I switch my portfolio? What will happen to my returns if I continue for the next couple of years? So if you are in this kind of situation, please do watch this video. Hi, hello, this is Ganesh Santuru, your stock market profit coach and author of three books in personal finance, and I'm going to share about why these funds are not performing and should you continue this investment in these funds or what should be your choice of investment. So keep watching. So, Global Innovation Fund, what is a theme or what is a purpose? I think global disruption has been one of the theme during the last couple of years, and not in India. Global funds. It was launched. A couple of funds has launched. The global fund houses is launched, which invest in stock market across the world. So, for example, Access Global Innovation Fund invest in Schroeder ISF Disruption Fund, which means in India, people Access will collect money and they will invest as a it's a ETF, it's a index fund. So they invest in this fund will invest in another mutual fund called Global Disruption Fund. So they will put it in all the stock markets across the world. So this has been an investment choice. So there is a huge global diversification. So if you are someone who wants to tap the potential of global investments, this is a huge opportunity because investing in India can be done through stock market or mutual funds or all these mid cap, small cap, multi cap, flexi cap, or all these things. And say you are chosen flexi cap or multi cap, it means that you have covered most of the indices. And if you want to explore another option, that is where Global Innovation Fund plays a part because globally certain stock exchange performs well, and that too global disruptors, the companies like Apple, Netflix, or Amazon, they become huge hit immediately, and the companies which makes a turnaround like Disney, because they were a theme park. They were almost like a theme park, and who performs something similar to it. But suddenly they had a movie house. They built a huge brand around it. They launched an online app, and now they are one of the top performing stocks. And they made a turnaround from theme parks to movie house to OTT player. So it's a disruptor, and 5G is coming up, and it has been launched across the world in most of the countries. And certain companies will come up in 5G, and that will be a huge disruptor. So based on this, Global Disruption Fund or Global Fund has been launched, which invests in disruption companies. And based on that, in India, Access is launched in 28th May 2021, and in July month, Kotak has followed suit because if one company is launching something unique, immediately rest of the companies will also follow through, or it has been a matter of time where Axis and Kotak has overtaken each other. So this has been the point of view for investing in Global Innovation Fund. So Global Innovation Fund, as the name says, a company which can disrupt the global theme globally and not just sticking to a region, that is called as a disruptor in any industry, fintech or whatever. And let's look at the why the returns performance has been very low in Global Innovation Fund. Either access it can be Kotak, but still why it is very low. Let me share you interesting data from Money Control. So just look at the Kotak Global Innovation 22nd July 2021, and this is a regular fund, and the expense ratio is just 1.59%, which means it's less than 2%. And just look at Access, 1.55%, and the launch date is 28th May, which means just few months apart both these funds were launched. And all these, if you look at the portfolio of these funds, you can understand that they invest in MF unit, not in others, because generally it will be filled up with equity or debt portion, and in this case they invest in MF units. What is that MF unit? Let's check it in. This is the Axis Global Innovation Fund of Fund leaflet. Once you go in, you can understand that they open-ended fund of fund scheme investing in Schroeder International Selection Fund Global Disruption. It means this Axis fund is going to invest in this fund, and this fund, Schroeder fund, is going to invest in rest of the companies. So they are going to invest in 9 sub themes. It can be fintech, digitalization, e-commerce, environmental, healthcare, new consumer, communication, food and water, automation. And what does the disruptive mean? not just disruptor alone, but how they companies changing themselves and applying to the new age technologies. Let's look at some examples from Schroeder itself. Okay, this has been the Schroeder's. Once you go to the Schroeder website, you can understand you can get this fund brochure. And once you go to the fund brochure, I just wanted to check these companies because disruption, any company almost from 1965, if you look at the average age of a company can be 30, 35, at max 40 years, close to 40 years of age. And in the last 20 years, right from 2000 right till now, the average age of the company has been falling drastically. Just look at the last, since 2016 17, right from more than 20 years, the average age of the company has gone down to 12 years, which is S&P 500. S&P 500 is a US listed stock exchange index and the average age is just 12 years. In a forecasted average age of company, I mean, looking at this, by 2027, it is going to be 12 years. Right now, it is around 15 years or so. So it has been constantly decreasing. In 2023, it's around 15 years. By 2027, this may go down. So what you can understand is that any company which is coming up, it is disrupting, and soon there is another disruptor. Or any company, just look at that, Amazon, they revolutionized the retail market and they were able to maintain their stand. But it's just one company, but it disrupted the retail market once for all. Enabler, Samsung, one of the largest producer of renewable batteries for electric vehicles, and they enabled the possibility of electric vehicles across the world. Adapter, Walt Disney launching a suite of streaming service following Netflix success. So this is another way where that company would have gone out of fashion, but they reinvented themselves. And another company which could not reinvent is Nokia. They failed to impress the people and they lost everything. Now Nokia is nowhere. So these are the four points for disruptive growth. Any company which is a disruptor, enabler, adapter, they are going to be there in the portfolio. And denier, any company which is not performing, it will be thrown out. And this is what Schroeder is going to do. Targeting long-term capital growth and free to invest in wherever we see the best opportunities. It can be a next Netflix or whatever. Invest in disruptors, enablers, or successful adapters, and the stock is going to be 50 to 100 numbers backed by a global team of highly experienced equity specialists. So it means that they can be anywhere across the board. Okay, so the returns performance, if you look at, it has been negative. Just look at the NAV of these funds alone because the Kotak has been any fund new fund NFO will start at 10 rupees and right now it has given negative returns since launch. Since inception minus 15%. It's just close to 2 years right now. This is Kotak fund and let's look at the Axis fund also. Axis also minus 3.8 annualized returns, which means both are negative returns or negative performing funds. So anything if it isn't in a so this is what we have seen Axis and Kotak. Any fund house which is launching a NFO in the beginning it may not perform because they have been launched at the peak of the market condition and immediately after some time markets will turn negative or for sure it may turn negative. It has happened in 2006-7 period and now it is happening right now. We have a proof. So in 2020 and 2021 peak, all the companies, IT companies, Amazon, Flipkart, Amazon, uh, Netflix, Facebook, they have been performing like anything. And in a short span, those companies, including Tesla, they were not performing and they had crashed by more than 40-50% in the subsequent years and because of this fund didn't perform and the NAV of these funds are less than 10 rupees. Kotak it's around it's 7.5 or something. Axis is around 9.8 or something, which means the people who invested a lump sum or who are investing in SIP still they are not seeing the positive returns for last close to 2 years. So when they can see positive returns, maybe another 1 to 2 years. And what are the reasons for negative performance in the last 2 years? Is once all the IT companies, all the IT stocks and global disruption companies, they are becoming the market valuation had gone down because of the excessive valuation which was existing at that time. And the second point, uh, all the recessionary fears which has started growing up in the last 1 year or so, because of which all the companies started performing negatively, and recessionary fears has stopped the further growth of these companies. So, and third point, the banking crisis has stopped the opportunity for easy money for most of the companies, and because of which there is a huge fear of banking which may fail again. And already three banks had gone down in US, and Credit Suisse in Europe is also facing was also has also faced the brunt of this recessionary fears. So all these are saying that there is a huge negative news or global cues available across the world, and once things keeps changing, automatically this fund will perform. The Schroeder or Wellington fund of Kotak has invested in Wellington fund, so which invests in global innovation companies. So it's a one this fund Indian mutual fund house like Axis and Kotak collect money and they invest in global fund houses, and those fund houses invest in global companies. The last couple of years, these companies are not performing. That is a direct result of which our Axis Global Innovation and Kotak Global Innovation is not performing. And stick to it, stick to your investments, keep paying, and in the next 1 to 2 years, for sure, you can see huge returns. And once the NAV increases to 15 or 20, automatically you'll see huge returns in a short span of time, and it's just a matter of time, and it's just 2 years. When it comes to equity, you need to pay for 4 to 5 years timeline, and this is a global fund, so you should have a global appetite. If you need global returns and expecting a huge returns, you should have global update of at least 5 to 7 years. So stick to these fund houses, stick to these funds, and let's see what will happen in the next 1 to 2 years. Again, this is not a recommendation, this is a review and my view on these two underperforming funds for right now. Please share your comments so that I can answer your questions if it is any, and see that if this is useful. Thanks a lot for watching.